You know, when you see those huge headlines about China's economic power, it's really easy to think that's the whole story. On one hand, you have this image of a global superpower. But on the other, you hear these whispers of some really deep-seated problems. So in this explainer, we're going to peel back the layers of that dual narrative and look at the gap between the story China tells and what the numbers actually say. Hey everyone, welcome. So just before we dive in, a quick shout out to Micky for sponsoring this re-edit of a great discussion from the Sip&Talk podcast. What we're going to do here is pretty simple. Cut through the noise with some objective, hard data to help us all get to the core of what's really going on. So let's get into it.
So what kicked this whole thing off was this fantastic question from a listener. And it gets right to something that confuses a lot of people. What's the difference between a country's total wealth and how prosperous its people actually are? This one question just perfectly sets the stage for our entire investigation.
All right, so let's jump right into myth number one. This idea that China is this incredibly wealthy nation. Now, this perception is built on some truly mind-boggling numbers. But the truth, well, the truth is always a little more complicated, isn't it?
And look, this is the number that gets all the attention. An estimated GDP of $18.5 trillion. That is the second largest in the entire world. I mean, it's an undeniable sign of massive economic power. But here's the real question. Does all that national power actually mean the average person is wealthy?
Okay, but this chart is where it gets really interesting. When you take that massive $18.5 trillion and divide it among 1.4 billion people, it comes out to around $13,000 per person. Now compare that to Taiwan, a much smaller total economy, sure, but the per capita income is around $35,000. Think of it this way. China has all the bread for the entire school district. It's a massive, massive pile. But in Taiwan, well, each individual student there gets a much, much bigger piece of bread for lunch. See the difference?
And this actually leads to a really important official distinction. An economy is usually considered developed when its per capita GDP gets over that $30,000 threshold. So, as you can see, Taiwan is comfortably in that club. But China, despite its huge total economy, is still classified as an upper middle income country. And that's the bottom line, right? Total GDP, that's about national muscle. But per capita GDP, that's about how well the average person is actually living.
So that brings us to our second big myth, the Belt and Road Initiative. Now, you've probably heard of it, and it's often painted as this amazing, generous gift to the world. This grand plan to build infrastructure everywhere.
And yeah, once again, the number is just staggering. Over $1 trillion invested. That money has funded thousands of kilometers of railways, ports, and power plants all across the globe. I mean, on the surface, it looks like this incredible act of global generosity.
But there's this quote that just perfectly captures the dark side of it all. For a lot of countries, that dream of shiny new infrastructure has turned into an absolute nightmare of debt. What looks like a gift can come with costs that are just impossibly high. So how does this debt trap actually work? Well, it usually follows a pretty clear pattern. It all starts with a loan that isn't very transparent and has high interest rates, sometimes double what you'd get from the World Bank. Plus, the loans often force the country to use Chinese contractors, which can drive up costs. Then a lot of these projects just fail. They don't make enough money to pay back the huge loans. So the country defaults. And the final step? Critical assets, like a major port, get leased to China for decades. A perfect example is Sri Lanka's Hambantota port, which is now on a 99-year lease. And the fallout from this? It's huge. By 2025, 75 countries are expected to owe China $35 billion. The real-world impact is just devastating. In Zambia, it meant slashing the healthcare budget by 30%. In Kenya, this debt crisis sparked deadly protests. And in Sri Lanka, the country defaulting on its loans led to total economic and political chaos. This is the real human cost hiding behind that trillion-dollar price tag.
Okay, so while all that is happening on the global stage, China is also dealing with some massive problems at home. For decades, its incredible growth was powered by what seemed like endless natural resources. But now, that advantage is flipping, and it's revealing a gigantic, unseen environmental cost.
Now, we've all seen the pictures of the smog, right? The pollution from coal that drifts over to places like South Korea and Japan. That's the visible problem. But the data points to something even scarier, something you can't see. An unbelievable 60% of China's groundwater and 70% of its rivers are reportedly so polluted they're not safe for people to even touch. And even crazier, half of the country's rivers have literally vanished in just the last few decades.
And speaking of water, let's look at this data on tritium. It's a radioactive byproduct that gets released during normal nuclear plant operations.
This 2019 data shows that emissions from some Chinese plants are way higher than their neighbors in South Korea or Taiwan. Now, these levels are regulated, but the sheer volume is getting a lot of international attention. And just for some perspective, that's way more than the planned maximum annual release from Japan's Fukushima plant, which, as you know, has been a huge point of controversy. So let's put all the pieces together. You've got the economic reality check. You've got this global backlash to the debt crisis. And then you have these severe environmental problems at home. When you combine all of that, a new picture starts to form. All these factors are pushing a major shift in China's strategy, and it's leading to a new, much more aggressive playbook.
There's actually a theory in geopolitics that explains this perfectly. It's called peaking power theory. The idea is that when a rising power starts to feel its growth is slowing down, when its window of opportunity is closing, it doesn't get more cautious. Instead of playing it safe, it actually gets more aggressive. It starts taking bigger risks to lock in its position before it starts to slide.
And when you look at what's been happening, the behaviors line up almost perfectly with this theory. At home, you see intensified repression and surveillance. On the economic front, the goal shifts to controlling global supply chain choke points, like rare earths. And militarily, well, we're seeing what's been called the biggest peacetime military buildup since the 1930s, along with a lot more pressure in the Taiwan Strait and on its borders.
So, the big question is, where does all this lead? The year 2026 is a really interesting one to watch. It's the start of China's next big 5-year plan, and it feels like a symbolic moment for a country that really seems to be at a crossroads.
And that really is the multi-trillion-dollar question, isn't it? By 2026, with all these debt crises, the resource problems, the global pushback, will that official story of unstoppable strength still hold up? Or will the facade finally start to crack under the very real weight of all these problems?
Because in the end, the real test for a superpower isn't about how loud it can boast, but about how willing it is to face its own complex realities head-on. The path China chooses from here won't just shape its own future, it's going to shape our world for decades to come. If you want to go deeper on this whole topic, you absolutely have to check out the full discussion on the Sip&Talk podcast. And of course, you can find the link to our sponsor, Micky's channel, right there in the information section. Thanks so much for watching.